Hello everyone, welcome to the daily markets update video, and today I want to share my learnings about the market action and also my insights going forward. So as always, let us jump on to the detailed analysis starting from the weekly time frame. So for the weekly time frame, the only update for today is that we are on the top of the range. So let me show you exactly what I mean. So as you can see over here on the weekly time frame, we have been discussing this range from a lot of time, and today it seems that we are at a very crucial stage, almost about to break out on this range. So we are at the top of that range, and hopefully we can break out within 1 or 2 weeks. But this is the major development wherein this can also act as a very big resistance. But the key thing over here and the key insight from this weekly update is, if we are able to close above this 0.786 level, then look at how much room do we have on the upside. So the next resistance is sitting at 15,916. So this is the next resistance if we break out of this range, and if we are able to close this week on the upside. So keep a close eye on this range. If this gets broken, then the next resistance is sitting at the top of the Bollinger Band, that is this one. So just for you to mark the levels, this is the next resistance. So now let us go to the daily charts and see what we can learn from that. So over here, you can see that this is the daily time frame. And what I have done is I have taken the most recent high, that is this one, like the biggest high, that is this one in the recent times, and I have taken the absolute low in the recent times, and I have plotted a Fibonacci range. Now, why have I done this? The reason is, if you have seen the year, in the entire year, this is the first stretch of a trend wherein we have got 1, 2, 3, 4, 5, 6, 7, 8 days of blastering rally. So when we have such huge moves on the upside, my job as a trader is to actually know where are the limits, where the markets can see the signs of exhaustion. So as I mentioned yesterday, that the R1 level is a big resistance level. If we tend to break it, then the next the next resistance is sitting at the upper end of the Bollinger Band, that is over here. The thing is, if this rally has legs and if this rally is really sustainable, then my only condition is it should survive above the 50-day moving average. Now, it has only been 2 days, before we actually conquered the 50-day moving average. So the rally is yet to be confirmed. So this week we have a lot of, Fed speakers speaking, a lot of economic data coming out, and also we have Federal Reserve Jerome Powell going to speak twice in this week. So we will need to, make sure that we are above this, zone that I have discussed over here, that is the battleground for bulls and bears. So in any case, if we test this 5-day moving average on an immediate basis, then that will act as a first level of support. My main level of support is the 50-day and the white line that you see, that is the anchored VWAP. So on the downside, this is my zone to be noticed about. And on the upside, let's say tomorrow Jerome Powell comes out and speaks about the economy and not raising rates and all those things, then my upside target is going to be the upper level of the Bollinger Band, that is this one. So keep a close eye on these levels because we have a lot of economic data coming in next week as well. So we have CPI data release next week, that is the inflation numbers, which is going to be highly volatile, and also we have a lot of Fed speakers speaking this week. So we will have to see if the market can survive on these levels and still go higher, because already there is a lot of green days and a back to back. So be very cautious when shorting it, and I think if we can survive above the 50-day and the anchored VWAP, then we are poised to go higher. Now, this may sound really counterintuitive, but price action is price action, and as long as our charts doesn't tell us to be bearish, we won't be bearish. So keep a close eye on these targets, and regarding the daily time frame, we are still bullish. because the price action is bullish. And however we may feel, it's not about the feeling, it's about the real data and taking a data backed decision. So even if we lose the R1 level in coming days, as long as we are above this zone, we should be bullish. So that's my take on daily analysis. And now let's go to intraday time frame. So let us start now the analysis of the intraday time frame. So in the intraday time frame, the biggest observation that we did is like we started losing the R1 level just in the 15 minutes of the session. So when we break a very big resistance, always make sure that if the resistance is broken, then there is a lot of upside to come. So let me show you what do I mean over here. So when we go to the 5-minute time frame chart, as you can see over here, the moment we started the opening session over here, right, we got a big red candle, but slowly but surely we really gapped upwards. And what we saw is we break the 265 level very easily. And why is this significant? You go to the daily charts and see over here 260 level, that is 15,260 level, is the R1 level. And if we start closing above the R1 level on a consistent basis, so first we closed over here and we also closed above this resistance R1. So we knew that we are breaking the daily R1 level, that is the daily pivot level. So there is very little downside. Why? Because we don't have a nearby daily resistance. And when we got a confirmation on the bullish side, when we broke down the R1 level on the intraday time frame, then there is a lot of upside to come. So as you can see over here on the pivot levels, we destroyed R1, we destroyed R2, and then we touched and got rejected on the R3. But you might have a question that why did we break out so many pivot levels? That doesn't happen very frequently. So the reason is very simple. One key observation is, if you look at this move is nothing but almost 119 points on the Nasdaq contracts. So any move which is 100 to 150 points for Nasdaq contracts is very usual. So it doesn't matter how many standard deviations we broke, in this case R3, but always look at the amount of points that we are traveling, right? So in Nasdaq contracts, if you are up by 1%, then it's pretty usual and pretty normal. So that is why always don't count in terms of the number of pivot levels broken, always count in terms of the number of points being traveled on intraday basis. So normally Nasdaq contracts, when it moves in one individual move, it tends to give you almost 100 to 150 points, and then it may face a new resistance. So if you can see over here, we consolidated on the R1 zone for a little bit, and after 7:30 we started breaking upside. So that was the indication that today is going to be bullish, because since we did not have a big data release, a big catalyst on the downside, so that is why the markets rallied today. And always remember, like before the big events, the markets always tends to trap the shorts. So remember that Wednesday and Thursday, Fed Chair Jerome Powell is going to speak. So before that, the markets will go up. And if he's really bullish, and if he's really easing on the economy, then that easing will result in markets going up. So as you can see right now, it seems like market is pricing in the rate cuts, and markets are pricing in that Jerome Powell will not be as hard on the economy or on the capital markets. So let's see what happens. But the biggest indication for us was, once it destroys the daily level of R1, then there is a lot of upside to come. So always, that is why wait for 7:30 for the Pacific time, or 45 minutes to 1 hour on an intraday to see the real trend where it is. So this was my take on the intraday time frame. VIX also behaved in a very similar way. If you can see over here, it tried to take the support on S1, but again it broke down and then it just rallied. So also the QQQ behaved exactly the same way as far as the Nasdaq contracts are concerned. So let's see what happens. Let's see what is the implication of Jerome Powell on the markets. But yeah, as far as intraday time frame is concerned, the very fact that we broke down the R1 level on the daily time frame, that is 250, we should have, taken the long calls. So that's my learning from the intraday. And with that, I would like to conclude this video. So with that, I would like to thank you for watching, and always keep learning, keep growing, and keep trading. Until next time, see you guys tomorrow.